Hi,
Taylor.
Alistair.
Josh. Nice to meet you. Taylor.
Hi, Alistair.
Nice to
Lawrence.
meet
Nice to meet you.
Hello, hey.
Josh.
Matt, nice to meet you.
Hi, Matt.
you.
Lawrence.
Mike, nice to meet you. I'm John.
And Taylor.
Hi, Lawrence. Lawrence.
Hello and good morning, everyone. Welcome to the third annual Sauder Summit Global Case Competition. This is round 3 of the competition. The judges present today are Matthew Prosser, Marketing Manager, Glentow; Mike Bellett, Manager, Assurance Mining Group, Ernst & Young; Alistair Mall, Lead Management Consultant, Sierra Systems Group, Inc. Judges, thank you all for volunteering your time and expertise to the events today. Audience, please turn off your mobiles and refrain from using them during the presentation. In addition, please do not leave the room or make any disruptions for any reason. After the Q&A period, I will ask everyone to leave the room as quickly as possible to allow adequate time for judge deliberation. Each presentation is 20 minutes, followed by 10 minutes of Q&A. Any time not used for the presentation will be reallocated to the Q&A period. For the presentation, the timer will be giving visual reminders at the 5-minute and 1-minute marks. When there are 15 seconds remaining, the timer will be signaling presenters through arm gestures as such. Presentations will be strictly cut off when the presentation time has elapsed. Judges, we request you not ask any new questions in the final minute of the Q&A period. The timer will give you a reminder. Please note that the presentations and Q&A periods are recorded. Presenters, you may begin when you're ready.
Glentow has been with us from the start, and really it's helped transform the telecommunications industry. It's helped inspire people to connect and really build lasting relationships as well as lasting communities. Since its inception, it has really undergone multiple transformations from a singular storefront to the largest Canadian phone retailer. So the question today is really, how do we sustain this growth moving forward? It's not enough just to focus on the successful components of your business, but we have to be on our toes for both the retail divisions as well as the business division. Good morning, everyone. My name is Ebony, and these are my colleagues Taylor, Lawrence, and Joshua. And we're very excited to be here with you today to share with you our strategy on how to refocus the business division and help it excel in the coming decades. So moving forward, we know that the business division, in comparison to the retail divisions, have really been struggling. In light of intensifying competition and the difficulty of innovation, Glentow, as well as its competitors, are having trouble differentiating themselves. In addition to that, much of Glentow's clients operate in industries that are very cyclical and volatile, giving it lack of visibility into future revenue streams. So really, from here, we can only go in 2 directions: move into a new market or expand our product line. As we go through a recommendation, we want to keep 3 key goals in mind: short-term growth, improving our bottom line, long-term sustainability, and really as a public company, it's always our priority for our obligations to your shareholders. And really by the end of this presentation, we want to show you how you can increase the value of your business division by up to 33%, obtain 8 to 10 more contracts in key industry, as well as increasing your presence in broadband data in 4 to 6 additional provinces. And we want to break down our recommendation into 3 components: consult, connect, and command. Consulting for the right strategy, connecting the demand to your services, and finally, commanding market share. Moving forward into consult. As I mentioned before, the business division is really struggling in comparison to the retail divisions, in terms of absolute value as well as percentage of total sales. And this is for a variety of reasons: decrease in demand, volatility, cyclicality, etc. So moving forward, we must discuss, though, that Glentow has really key strengths that it maintains. It operates in a niche space in between mom and pop shops and really huge wireless carriers. And it has many value propositions. First, customized solutions. Next, legendary customer service, and really a variety of products and services. And really believe that Glentow can offer these strengths into their business division. And moving forward into briefly talking about the competition, Glentow obviously faces competition from its direct competitors in various regions, as it traditionally has. but it also has increased competition from the radio manufacturers that it has traditionally partnered with, which is a growing concern for us that we must address in our in our recommendation. At this point, I'd like to pass on the presentation to Taylor, who will discuss the first component of our recommendation.
Thanks, Debbie. So now that we've discussed your company's current situation, as well as short-term and long-term objectives in detail, we can jump right into how we can connect your company's needs to the right recommendations as well as resources. So our goal here is to really help Glentel propel forward and excel further by identifying different key opportunities in different areas. So first, behind me, you'll see our overview of our two-pronged recommendation. So on one hand, we recommend your company to expand LMRS further within the public safety industry, starting with high density areas to capture most growth. And then in the long run, we recommend introduction of mission critical LTE on top of your LMRS offering in order to really provide more diverse applications. So those would be, if you were to read this slide, you could go from short-term to long-term, and that is one part of our recommendation. So the second part of our recommendation entails building wireless backhaul infrastructure and solutions in underserved areas. So we've done some research on our own, and then later down the road, probably a few years down the road, we hope to introduce the LMRS LTE technology in these regions, hoping that there will be some infrastructure in place by that time. So as you can see, both parts of our recommendation really provide short-term solutions that can help propel Glentel forward as well as excel in the long run as well. So now that we've discussed the overview of our recommendation, we'll just move right into our first part of recommendation, which is the LMRS portion of it. So behind me, you'll see 4 criteria that we use as a team in order to evaluate different options as to what your company should do with regard to LMRS. So those 4 criteria were growth potential, synergies, competition, as well as profitability. And by evaluating our options based on these 4 criteria, we were able to come up with a very high impact strategy for short-term growth as well as long-term sustainability. So using these 4 criteria, after extensive analysis, we have decided that public safety presents the most room for growth opportunities for your company moving forward. Currently, you guys operate in oil and gas, mining, utilities, transportation, and public safety, but like we mentioned, these 4 criteria have directed us towards exploring the public safety industry a little further. So LMRS, now that we've identified LMRS and it's really used a lot of different uses and importance in the public safety industry, we can see that there are actually a lot of diverse applications that are being used right now. So for example, LMRS is very good for reliable and secure and time-sensitive communications, which is very critical in the public safety industry, as well as we can see a lot of potential synergies with your wireless backhaul solutions, and on top of that, it will generate more steady cash flows given that it's not very volatile or cyclical. And moving forward, so now that we've established that we want to narrow in on LMRS and public safety a little bit more, hopefully in the longer run in the bigger scheme of things, we hope to bolster your LMRS existing offering by adding LTE, mission critical LTE to your product offering. So what it'll do is really combine the real-time information given by LTE and then add that on top of your existing secure voice networks in order to really create much more comprehensive and holistic solutions for your clients. And so, for example, in LA, actually there are some cases being used, some cases of LTE being used already. So LAPD has actually witnessed a 40% decline in their in the crime rate in the neighborhood after installing around 10 wireless cameras. And so, as you can see, the bottom line really is that LMRS combined with LTE can really provide a new platform where different public safety organizations can really utilize data in a much faster and more responsive manner. So how do we go about accomplishing this goal? And so to answer that, we believe that your company already has great relationships with a lot of different partners, and we really recommend you guys to leverage partnerships in order to establish further partnerships with different public safety organizations as well as LTE providers in order to really accomplish this goal. And so now that we've covered the first part of our recommendation, I'll now pass on to Lawrence, who will delve more deeply into the second portion of our recommendation.
Thank you, Taylor. So now that Taylor has discussed the first portion of our recommendation, I'd like to discuss the second portion regarding wireless backhaul solutions. Now, as we can imagine, wireless backhaul solutions allow for the expansion of broadband internet throughout Canada, reaching consumers and businesses, and thus spurring numerous economic growth. And as we can see, there are three primary reasons why we should invest in this strategy, why you should invest in this strategy moving forward. The first being lax government regulations. Now, the government specifically in Canada, is in full support of the expansion of internet broadband within Canada. And because of that, provides telecommunications providers with the sole responsibility of determining pricing models. Additionally, onto our second point, there have been $305 billion in pledged money recently, as of 2014, that is going into underserved areas, primarily in the areas that we'll indicate later on. And finally, we believe that we should enter this strategy primarily due to the synergies it has with our previous portion of our recommendation, which includes the LMR's portion in public safety. So more specifically, the broadband internet that we'll be installing in these regions will help for advanced video surveillance and connectivity problems and connectivity issues that we'll need for the expansion of public safety LMRs. And so you might be wondering, okay, these are the benefits. How can we implement this program? Well, it really starts off with the core strength of your company, specifically your existing relationships with internet service providers in this country. As you can see from the slide behind me, Bell, Rogers, and a lot of other of these internet service providers already have existing connections with you. More specifically, these internet service providers will begin contracts with the government, oftentimes in the period of 2 to 4 years, where they'll be tasked with developing technology solutions for their customers. Now, this is where we come into play. Our goal is to lower the upfront costs for these internet service providers in delivering the technology to the end consumer. Now, to provide an example of this, I've outlined a 4-year backhaul contract. So in this case, let's say, for example, we want to form a partnership with Bell and thus lower the upfront costs. Bell would submit an application before the January deadline, receive notice of its approval in the spring, and then reach out to us following that period of time in order to expand its infrastructure in order to deliver its technology solution. In this case, it's given a 4-year deadline. Now, knowing this implementation, you might be wondering, what would be a good geographical starting point? Well, we considered 3 primary criteria in this case. First, we wanted to locate regions that were underserved at the moment. Second, we wanted to target regions with high LMR spending. Now, this is because of 2 primary reasons. First, it indicates that we are already investing large amounts of money in these regions. And second, and more importantly, it emphasizes the synergies we have with our previous recommendation, as well as the fact that these regions oftentimes have public satellites or public radio and are more willing to adopt the internet broadband technology that we're proposing. And finally, but not least, previous slide, population density is a very important consideration for us because it improved the return on investment for installing these cell towers in these areas. And so let's moving on to the geographical expansion. As you can see from this map, we're starting from the coast mostly and moving towards the center. But more specifically, we're starting in Western Canada. And this is primarily due to not only the fact that our headquarters is based in Western Canada, but also because we believe that a lot of the satellite technology that's already in place in Western Canada is can be more readily expanded upon to include internet broadband technology. And so moving on to our specific Western Canadian expansion, next slide. We believe that Alberta, Canada, represents the best opportunity, primarily due to its high concentration of underserved population, in addition to the fact that it's high density and high LMR spending. However, in addition to our Alberta expansion, we're strong believers in Eastern Canadian expansion as well. And over the next 5 to 10 years, we believe that we can expand in Eastern Canada, starting with New Brunswick, considering its high density and its high LMR spending. But even more importantly, if you notice the map that we've included all the way on the left, you'll see that New Brunswick is populated by red dots, which means that there's a significant underserved population in the country that we can tap into. And so now that I've discussed the components of the second portion of our recommendation, I'd like to pass it on to Josh, who will discuss the financial implications of our recommendation, as well as the risks and mitigants.
Thanks, Lawrence. Now that we've gone over a bit of our strategy, we think it's just as important for you to understand that it's something that's financially feasible and has a strong impact on your bottom line. And so to do that, we decided to build out a market revenue model for both the wireless backhaul solution expansion and the LMRS public safety sector expansion. In this case, we looked at the Connecting Canada spending budget, starting with a total addressable market of $305 million, because that's how much they're going to spend the next 3 years in this project. And we think that you can get 10% market share by 2017, and we phased out this market penetration evenly throughout the 3 years. We made other assumptions revolving around these certain markets, and we'd be more than happy to delve into them if you would like. But with these assumptions, we arrived at a net present value of $10.5 million, assuming a 10% discount rate. And in addition, with this net present value, we have the next market model where we actually base this off of the average LMRS contract value that we've seen based off of your historical contracts. And we arrived at that at $2,000 for each of these contracts, $2 million, within the public safety sector. And then we assume that on the first year, conservatively, by the end of this year, you could lock one more contract and 2 years more, 2 contracts within the next 3 years for this sector. Now, in addition, we looked at incremental operating expenses, and we think that one of the biggest ones is actually increasing your bid team. Because it's important for you to have a strong bid team so that you can actually secure these contracts. And we factored in that you start off in the first year spending $400,000 expanding that team and training it, and then we looked at a 50% reduction rate and phased out over the next 4 years of this plan until 2019, because we think it's more important for you to invest heavily up front in expanding this team, and they can get trained and require less training in the future. This project yields a net present value of $4.5 million, assuming the same discount rate. Now, these two projects combined together would have a net present value of $15 million. And you may be thinking that this is really not much, because your revenues are operating in the billions of dollars because of your retail division. However, specific to your business division segment, this is extreme value. We actually looked at some of the parts analysis and saw what your business division would be valued in the case of a spin-off. And in the case of a spin-off, if you're just spinning off that specific division, let's say right now you take your last year's revenue of $30 million. Assuming a 40% EBITDA margin, that translates to about $12 million of cash flow you're taking it home. And with this $12 million of cash flow, we can tag on an industry standard 5x EBITDA multiple, valuing that division specifically at $60 million. Now compare this value today of $15 million to the $60 million value of the whole division. That's nearly a quarter of the entire value of this segment that you can increase the value of. In addition, if you tag on a more conservative EBITDA margin of 20%, that would cut the valuation in half, which would be $30 million, meaning that $15 million could actually increase your segment's value by 50%. And that's why we're so excited to present to you this recommendation. But of course, with any recommendation that is so comprehensive and financially healthy, there has to be some risks involved. And one, we see that there's rising competition in the LMRS market. And a lot of your upstream suppliers who you partnered with, like Motorola, those vendors, now have their own downstream solutions called Motorola Solutions, and they are reaching the end consumer as well. And we think that one way you could fend off this competition is the fact that you have the solutions integration platform, and you have an all-comprehensive suite, long-standing relationships with your clients, and they appreciate that and take that value, and you should be able to manage and sustain those relationships. In addition, this is an industry that is slow to adopt technical change, especially because it's mainly focused around the public sector. However, there's large demand for advanced solutions in the market right now, because we've seen that the public safety sector has more needs for advanced video streaming devices. In addition, there's government policies that require bidding processes, and some companies may not actually end up getting the bids that they applied for the funding. However, this is mitigated because you can pass on this execution risk to the ISP providers, because they're going to be the ones that require the funding, and whichever ISPs end up getting the funding, you can reach out to them for partnerships to set up the infrastructure in underserved communities. And finally, there's a consumer misconception that cellular devices are cheaper nowadays to have and just as capable because of the PTT technology. However, this actually isn't true, because there's a one-time fee for your products, whereas cellular devices have long-term contracts. So you can show that value to the consumer. In addition, in terms of implementing this whole process, we think you should start now, immediately, partnering with public safety organizations so you can set up their wireless communication systems and reallocate your resources into that division particularly. In around 2018, I think it's important for you to start beginning discussion with LTE providers who will roll out 5G technology, and you can do that in around 2010 and 20 to renew contracts. And conducting surveys and quality assurance while managing this throughout the whole process is important too, until you introduce the mission-critical 5G LTE technology. In terms of wireless backhaul solutions, it's important for you to start contacting these ISP providers now, because by summer, construction can already start. And then you can, throughout 2019, there's a spending program, and you can build out infrastructure starting in Western Canada and Eastern, and going towards the middle, as Lawrence mentioned. Thank you, and now we'd like to open the floor to any questions, and we're very happy to hear your feedback.
Yeah, thank you guys. That's awesome. I really appreciate how you touched on the bid team as well as the cash flow that's important to the organization. That's a huge piece in our shareholder value. How much cash, like it's a small part of Glencoe as a whole. The amount of cash that the division feeds back to the organization is really key. I do have a question in regards to that organizational change. So you were identifying that we need to focus more on the public safety, full solutions. Right now in Glencoe, we operate as a reseller primarily, where full solutions makes up maybe 20% of our portfolio. How would you guys recommend, or just what are your thoughts on how we transition the organization from being a reseller into a full solution provider?
Well, I think that you guys are well positioned, like we've just kind of touched upon in the value proposition slide. I think that you guys do have a very advantageous position as a reseller, or kind of like in a niche position between the large-scale manufacturers and the mom-and-pop shops that are around. But if you were to move away from that, I think that you guys already have a lot of partnerships. You guys have a lot of relationships you guys can leverage, as well as a lot of consulting expertise for within these industries that you guys do operate in. So I think that it wouldn't be too difficult of a transition, and I think that our recommendation actually kind of helps support that move, a transition away from being a reseller by incorporating other other aspects into your product offering, such as the mission critical LTE. And I think overall, all that combined together will really help you position yourself in a different way than just a reseller.
Yeah. And in addition to add upon that, you guys have recently launched Airtel, and we think that that is a very unique component, an innovative component of your business. And having looked into Airtel a little bit, there's a little bit of technical consultancy and consulting services attached to that, and we think that since it does operate in radio as well, so it can really be coupled with our LMRS strategy in addition, so that we can offer a full suite of services to your clients that you will be targeting in the future.
Do you know how much of Glencoe's business division the public safety sector currently makes up?
Well, based on our understanding, we know that you guys aren't investing as much resources into this sector.
We believe out of 54 contracts, excuse me if the number's a little bit off, but only 3 out of those are currently in the public safety sector. So we truly believe there's a huge room for growth in terms of demand as well as our capabilities.
Just to supplement Bethany's answer, we actually got an opportunity to get on the call with someone from, with a representative from your firm, and we were able to actually ask about that, why there weren't as many contracts. And the public safety industry. And it was that there were other opportunities that were more lucrative in other industries right now at the moment. But we just identified that industry as one of the most fast growing and one of the industries that will really need your solutions later in the future.
I was just thinking, we were looking at the slides had the underserved areas in Canada, that was driving your strategy in terms of, I guess, your timeline for implementation. And that was with the LMRS. And I'm just wondering if you kind of consider the connection between an underserved area and if there's an underserved demand. Like, when I think I personally would use a radio device very often, and we look at like a population in an area, does that have a strong correlation with demand factor? So we can go and install this infrastructure, but unless there's someone who really wants it.
So I guess what you're referring to is more confounding variables in our conclusion. I guess we did consider that first. I think one of the first things that popped up to us was maybe these areas are underserved because there isn't demand. Maybe the people don't really want to use radio or internet. And so we looked up a couple studies in Canada, some from private consulting firms, and we didn't necessarily find a direct correlation, but what we found was enough evidence to support the fact that there is significant amounts of demand for radio before there's significant amounts of demand for this broadband internet. So we kind of see it as like a stepping stone almost between, and it's not like a perfect correlation, but we feel like it's the best indicator for our recommendation.
And to add on to that, actually, another reason that we chose to take on this approach with coupling these two strategies is that with this demand for the radio networks, we actually think that public safety is an imminent need for any underserved community, right? Before some of the other sectors, before transportation, before oil and gas, before utilities, you need a fire system there, you need a law system there. And so this is something that the market needs, and we think that you're in a great position to provide.
Go ahead.
Because this is a basic need and it's a need-driven industry, do you guys have any thoughts on what the greatest value is that we can provide to our customers? Because it's a basic need. It's kind of like pumping gas. It can be very commodity-driven and price competitive, which you guys identified. So do you have any thoughts on where we can derive the greatest value to our actual customers?
Yeah, we believe that something Glentel really prides itself in is being able to create a service that is operable between different fire departments and different police departments, because we do offer such a huge variety of products and services, and that is really one of Glentel's key strengths in ability to integrate, even if two police departments or fire departments use separate radio systems, they are able to have consoles that help them communicate together if they are tackling the same, for example, forest fire or some other sort of emergency. And that is the value that Glentel, being in the position it is in between upstream and downstream, that is able to add that value. That type of interoperability, we believe, is really a key factor.
So you suggested two projects really, and you talked about synergies between the two. If you had to choose one, which one would it be?
I think that when we briefly discussed that, we would probably go with the first, the LMRS approach, just because we believe that the mission critical LTE is really the future, and then I think that by really focusing your efforts more into that sector and then adopting kind of the integration of mission critical LTE down the line, a few years down the line, will really position your company well. But I do think that they're both important.
A key factor of this space is there's a lack of innovation. So really, if we do sort of start investing into mission critical LTE now, we'll have that first mover's advantage going into the future and having something that was help position us in front of our competitors in the future.
Into the finance, $10 million for that project in your NPV. Is that including the synergies?
It's actually not. We valued them completely separately. But to be honest, we have a really conservative assumption. I mean, that's why it's like so low. If you actually look back at the finances, right now this is this is only we're only assuming you can get 2 contracts a year in the public safety sector. And we're assuming really conservative margins. And in addition to the previous project, right here, we're assuming low profit margins. And then, a lot of this is up to assumptions actually. So we want to show you how it would look in different scenarios. So here, we have this both for the LMRS expansion and for the wireless backhaul solutions, right? This entire model looks at assumptions. We could have factored synergies into here, but for example, like expanding the sales team, we projected $400,000. It could be up to $800,000. It could be not even expanded. The long-term growth rate could be 4%, 0%. Market penetration 6%, 14%. Gross margin could be 15%, 35%. Like we think that the way we try to look at it, since so much of it is up to assumptions, is very flexible in between different assumptions. And whether or not we factor in synergies, that's actually only leaving more room for upside. We really try to take the downside approach with this because we don't think the finances is the core part of this recommendation. It's more the supplemental thing to look at to make sure at least that this is a feasible thing and beneficial to your shareholders.
Last questions?
We're allowed to ask last minute. Great.
Thank you so
Yeah,
much.
good.